Welcome to Your Number Man, the podcast where we dive deep into business, finance, and entrepreneurship. I am your host, Johan, but you can call me Your Number Man. Over the years, I've worn many hats in the business world, from marketing ace to financial expert. And now I'm here to share my expertise with you. Each week, we'll explore strategies, insights, and stories to help you navigate the complexities of running a successful business. Whether you're a seasoned entrepreneur or just starting, this podcast is your go-to resource for all things business and finance. So grab a drink, settle in, and let's unlock the secrets to building and thriving business together. This is Your Number Man, where we help you achieve a bigger life in business. Hello everybody, I'm back again and I am flying solo today. I must say, the last 3 episodes with Rob Chisholm and Dr. Z gave us a lot of value that you can apply every day in your business and life, whether you are a numbers person or not. And I think the underlying effect today and my future guests will have on the show is to shape our perspective of business and the language of business, which is numbers, for a higher drive of focus and clarity. Well, today we're going to be a bit technical. We're going to dig into the cash management and the balance sheet. So just to recap, 3 financial reports for your business: the profit and loss, the balance sheet, and a cash flow statement. And I like to think of them as the 3 musketeers of business. They are all for one and one for all. And the ultimate purpose is to protect the king, which is, of course, cash. And they want to make it thrive. So let's move on a few centuries from the 1600s of the musketeers to today's motor cars. Have you ever tried going on a drive without looking at the dashboard? You have to check your speed. You can keep an eye out for any warnings that might come up. And very, very important, always make sure that you've got enough fuel in the tank. So what I'm saying is, fuel is to your car as cash is to your business. If you run out of it, your business is basically toast. The party is over. I know money is a serious topic, but I actually got a bit of a dad joke today. And because it's a dad joke, and I'm a bit of an older dad, you might not get it if you're from a different generation and a different taste in music. What does Mark Knopfler and a business with no cash have in common? Well, they both in dire straits. All right, thank you very much. Oh, I can just imagine my boys cringing if they're listening to it. Oh, Dad, come on. Anyway, oh, geez, Thinking about dire straits, I feel a song coming up. Yeah, it would be nice to get money for nothing, wouldn't it? But sadly, it's not always that easy. Business is hard. You might get exceptional sales. You might even make a decent profit. You could have happy customers and employees. But if you juggle all the aspects of your business, your cash can make a serious nosedive. And I've seen it so many times with my own eyes. My clients will say, "Come on, Johan, what are you on about? I keep track of my cash. I look at my bank account every day. My business is making a profit, and I know who is owing me money, and I know who I'm owing money to. Is staying on top of my profits not good enough?" And I would say, yep, you're getting there, but you probably look at your profit and loss once a month when the final numbers are usually a couple of weeks old. It's good that you keep track of your accounts receivables, which is basically your debtors, but you got to take into account whether you got to have enough cash for your payroll. You might have to pay overtime. The shareholders could have declared a dividend, which they're expecting next week. You got some creditors breathing down your neck for payments. And you also have a BAS statement. Well, in Australia, we call it the BAS statement of tax and GST at the end of the month, perhaps, to pay. And did you, for instance, take into account all your lease payments? What about that new Ford Ranger that you bought last month and put under finance? Did you take that into account? Have you got that money? So what I'm saying is all this info are not made clear in your profit and loss or your balance sheet for that matter. This is where your cash flow statement gives you much more clarity as well. Now, sure, a cash flow statement is also perhaps a historic statement of all the summaries that what went into your business and what went out of your business. So it's not timely, but at least it gives us a better perspective and it gives a bit more structure. And it's definitely a good base for you to do your cash flow forecast, whether you do a cash flow forecast for a week, 2 weeks, 3 months, or for a year. A cash flow statement will give you that sort of basis as well. So how does a cash flow statement work? Cash flow, like I said, is all the cash that comes in to your business minus all the cash that goes out of your business. So, yeah, that's pretty easy. There are basically two methods that accountants like to use. There's a direct method, which is a little bit more complicated and probably more reserved for bigger companies, specifically companies listed on the Australian Stock Exchange. And then the indirect method, which is more popular. So I'm just going to skip the direct method for today. End of the day, both methods will give you the same answer. The indirect method is perhaps a little bit easier to understand as well. So the indirect method will start with the net profit, which, as we know, net profit is not your cash. And then you'll do a few adjustments to arrive at a net operating cash in your business. So the adjustments are usually depreciation and amortization. So that is a non-cash transaction. It's on your profit and loss. Accountants like to put it in there, and I like to get my accountant to put it on there because it's a tax write-off, but it doesn't really influence your cash. Depreciation decreased the value of your tangible assets. So if you bought a tractor, a car, a piece of equipment, it gets devalued over a certain amount of time, and that's when you use depreciation. Amortization relates more to intangible assets such as goodwill, royalty rights, and patents that might devalue over time as well. So, like I said, they are non-cash expenses on your profit and loss, but it has to be added back. Now, the next step is to look at your changes in your receivables over a specific period. Like I said, the receivables are debtors, people that owe you money. So, for instance, you might have sold products worth of $150, which has been recorded as an income on your profit and loss, but you have not received that money yet. So that must be subtracted from your profit and loss. On the other hand, accounts payable are creditors, so people that you owe money to. The same concept, but it's the other way around. You might have bought some supplies to the value of, let's say, $100, which should have been recorded on your profit and loss, but you have not paid it yet. That credit is still on your balance sheet, so that cash has not been taken into account. That means that money is still in the bank, so it has to be added to your net profit. And then you'll have to make changes in inventory as well. So if you're a company that uses a lot of stock, a lot of small manufacturing companies keep a lot of stock, processing plants keep a lot of stock out there as well. Inventory is an item that usually you buy and then it goes onto the balance sheet. So it's not noted in your profit and loss again. So you have to bring that into account. So you've got to add the inventory on the system. You have to bring it into your cash flow statement as well. Now, this is quite a bit of a challenging sort of concept. So please hit me up on my website and I'll be happy to talk you through it or supply templates or whatever for you to have a better understanding of this. So we're just moving a bit away from the cash flow statement, but just talk about cash in general. I would say the 5 areas is sales, it's profits, it's inventory, it's your debtors management, and then also the 5th one would be planning, not good enough planning. So I'm just going to talk about the 5 here in a bit more detail. So if you don't have sales, you technically don't have a business. So sales are basically the cornerstone of every business. You need that sales. Even if you've got a good gross profit ratio and you've got everything else working for you, if the sales is not there, not a lot I can do in this episode to help you with that. We're going to talk a lot about marketing at some stages. The second one is profit. So are your profits high enough? We want to avoid poor margins. Now, I talk a lot about it. In all the episodes I had so far, every time I bang on about your gross profit ratio. How is your gross profit tracking? That's the engine room of your business. Make sure your gross profit is healthy, consistent, and it's really sustainable as well. Inventory. A lot of you might not use inventory. A lot of you are just service orientated, but a lot of you are perhaps got a small manufacturing. So what you need is a good inventory system. If you buy a lot of stock and you keep it on a shelf and you don't use it at a specific time, it's basically dead capital. So basically planning, when are you going to buy it and when are you going to use it? Make sure that the logistics are right. Perhaps you might want to consider different options as in drop shipping. The 4th item is debtors management. So remember, we as business owners, we're not banks. So sometimes you have a sale to a customer and you give them a 7-day, a 14-day, or a 30-day notice or terms to pay their bill. It's quite a hefty bill. It might be a job for 3 or 5 grand, and your 14 days comes and it goes, and you wonder, why didn't they pay me? And you phone him and say, oh, but I haven't received the invoice, or there's something I want to discuss with you. So sometimes people are playing for a bit more time, and you are not a bank. It's not your job to finance your clients. You deliver the service, so that money is yours. It's got to be paid on time. And what do you do? That's the other question. Well, first of all, what I got to say is a bad client that does not pay is worse than no sales at all. So there might be a time that you got to do an analysis of your customers and decide there's just certain people that you can't do business with. And explain to the people, well, if you want something, we have to talk about prepayments for that matter, because it's hurting your business to do deals with bad payers. You've done the work, you put in a lot of cost, time, effort into it, and they don't pay you on time. And you follow this up with a good system. Make sure there is an existing system. Invoices on time, every time. If the deal is once you've done the job, you invoice them on the same day or the next day, and put it 14 days, 7 days, or whatever the situation would be, and make sure there's a system. Don't be afraid to ask for deposits or progress payment if it's going to be a big job. There's people that you got to pay. You got to perhaps buy materials, put it into the job. And the job might take perhaps a month or 2 months to be finished. So just imagine how long you basically got to carry that job until you eventually get your cash. Let's say, for instance, the job is for 2 months. So you start a job, you pay people, you buy materials. 2 months later, you finalize the job, and let's say your terms are 30 days. So technically, you started spending money on day one, and you're only getting your money 3 months later. That's crazy. That's a very long time. And not all of us can actually cover that. So don't be afraid to say, hey, this is going to be a big job and it's going to take me 2 months to do. So by all means, I'm happy to do it for you, but I'm going to need a 15% deposit, 20% deposit. And then I'll also give you a bit of a heads up a month into the job, and you'll have to give me another 50% prepayment for that matter. Good planning. That's the fifth one, right, that I mentioned. So you've got to make sure your systems are in place and you have enough resources to work on the system. And if you don't, get somebody to help you. You focus on a big business. That person can plan for your tax payments, your GST. You know when it's going to be paid. It's going to be paid on time. That person's going to help you plan for your payroll and overtime, leave payments, bonuses, your financial payments, stuff that you don't always take into account. So now we're going to look at your cash forecast. So you look at your statements, your profit and loss, your balance sheet, and then also your cash flow statement, which gives you a good basis to start your forecast on. And I recommend you do a forecast. If you start with 2 weeks is perhaps a good time, then do it for a month, and then 13 weeks. 13 weeks is basically a quarter. And obviously some people would like to do a forecast for about a year, which gives a good indication where the cash is going to end up. But I say to be safe, probably about 13 weeks. So how much cash do you need in your business? Well, I would say it depends from industry to industry, business to business as well, your overheads. But as a rule, I would say, imagine you're going to have no sales for the month ahead. So for 4 weeks, you're not going to have any sales. And let's assume that you got debtors on the book, so accounts receivable, that you're probably going to get 80% of that in the next month as well. And you're going to pay all your creditors. So you got to basically work on the fact that you got to be able to finance your creditors from your debtors for that matter, but then also carry on the business as is, all your overheads for the next month without any sales. I say as a rule of thumb, make sure at least you got 1 month's kind of cash to run the business on its own. So for a business to be stable enough to hire staff, there's a lot of issues that you got to look at. You got to look at, can I afford that person perhaps for the next month or two without that person actually bringing in really something to the company? There's training involved and it takes time. So make sure you got enough cash, or you're going to have a plan. First of all, make sure that person will add value to your business as well. And secondly, I would say training, you got to work that into your budget. So if you want to set yourself up for success from the very beginning, what 3 things do you need? Well, easy way to say it is planning. Plan your research, plan where you're going to get the money from, plan how you're going to get your marketing. Look at your competitors, look at your markets, look at your pricing as well. Do your forecasting. What opportunities are available? If I run into cash flow problems, is there somewhere I can fall back on? Would I be able to get a loan from the bank? Would I be able to do sales without a lot of expenses? There's so many nuances and possibilities in business. Main thing is you got to have the sales, you got to have the right customers, and you got to have a good margin for your business to be sustainable. Another question I get a lot is, a person comes to me and says, okay, I want to start my business, but I've just got married last year. I bought a house. I don't have any equity. I've got a lot of debt, but I've got this great idea. And I started doing my research. How do I start a business? I don't have any cash. What do I do? And I would say to that person, it's not that simple. You need cash. So first of all, have you got a stable business plan? Have you got a business plan that's perhaps going to be very robust, strong, and backed up with research that you can show to the bank or whoever you need for the business? Look at opportunities where you can generate income, perhaps on the side. Perhaps there are savings that you can get from somewhere. We had Dr. Z in a couple of weeks ago, and he spoke about how you can put $100 aside. You want to go to Europe in 2 years' time, so put $100 aside each week, and in 2 years you'll have 10 grand. And I know you want to start it now, but is there ways that you can get that savings from somewhere just as a buffer to start? Perhaps just even pay for your own time from the beginning. Look for options to get funding. Perhaps you can get a business partner. And that's also a very dangerous threat to take on, a business partner. But if you get a right person, you will definitely be able to make it happen, for that matter. Just moving away from that. So let's say, for instance, you've got this business and you don't want to have a bad cash flow because bad cash flow can put you at risk for bankruptcy. Nobody wants that. But why is it also important to steer away from bad cash flow? Putting out all that spot fires, waste a valuable amount of time just to seek a solution to be able to pay your payroll, your people next week. And you can be so much more productive. When I was involved in a business in the 90s as a co-owner in South Africa, it was crazy. I mean, we had a good, thriving business. We had profit, we had happy customers, happy team. But just thinking about it just gives me a bit of a cringe. Each month, we've paid once a month salaries, and there was a lot of people owing money, and people paid by checks those days. So I had to get in my car and drive into the heart of Johannesburg to go and pick up checks. And, as you can imagine, Johannesburg is probably not the safest place on earth. So that was quite stressful. And we'll collect the checks, rush back and try to, clear them in the bank in time for paying staff. So that's a lot of stress. The other thing is you take these problems home. I was married, I had 2 young kids, 1 toddler, 1 a baby. I think you can't just leave your problems at work. You can't just shut the door and forget about that you've got cash problems. You want to be present with your loved ones. Be a much better husband and dad and friend to your friends. If you worry about issues at work, specifically cash, that really puts a damper on your life and, increase your stress levels to the max, basically. There's ways that you can get around it. Look at your financials, look at your numbers every day. Don't wait every month for your financials to come out. Plan your forecasting. Don't wait until you're sick and then go to the doctor and say, hey, doctor, I'm sick. Can you give me a pill or whatever? If you eat healthy, if you do exercise, if you do everything that's right to keep your body healthy, to keep your business healthy, you perhaps don't need to go to the doctor. So it is preventative. Get your systems in place, your marketing, your gross profit. Like I said, the profit and loss, the cash flow, the balance sheet, they are like the 3 musketeers. We spoke about the profit and loss. We did touch on the cash flow, and believe me, we still have to touch a lot more on that, which is coming up. And now the balance sheet. So let's get an idea, where does the balance sheet fit in? Imagine you build a house. You go and see an architect. You create a floor plan, you pick your unique features, and then you watch it transform from a piece of dirt to more than just a house. It's something beyond your dreams, your place of happiness, and something to be proud of. Well, that's in a sense how we sometimes dream of our business. And yes, it can be possible. So what has this all got to do with a balance sheet? Well, I say the balance sheet is the end product. That is your happy home. That is what you look at, what you say. This is the piece of art I created in my business. Look at my balance sheet. I've got everything. My ratios is working. My cash in the bank is there. I know where my debtors are. I know where my creditors are. Look at my liabilities. Look at my assets. And above all, have a look at my equity. So what I'm saying is, a business, yes, you got to do your profit and loss. You got to do your cash flow. That's your working documents. That's your tools. At the end of the day, you get back to your balance sheet. And that's something, that's your piece of art, like I say. Now, where does the balance sheet come from? Why is it called a balance sheet? Well, I'm no expert in nomenclature, but my understanding is that the origin of the word balance comes from the Latin word bilanx, which is bilanx, where bi is two and lanx is plate. So directly translated, it's two plates. So therefore, you can imagine me sitting here doing this podcast and I've got two plates in my hands. It's like a scale then. So in the left hand, I've got all my assets, and the right hand, I've got my liabilities and my equity, and they are in total equilibrium. So that's basically what a balance sheet is. A balance sheet is a state of equilibrium at a specific time of your business. Symmetry, steadiness, balance, it's all the same word. So that is what we're trying to achieve. Now, as I mentioned, I sat with my left hand, I've got my assets, right, liabilities and equity, and that is the formulas. Your assets equals your liabilities and your equity. That's the main formula. And I remember that's probably one of the first formulas I ever learned when I started accounting and bookkeeping as well. Now, we can change it up a little bit. If assets equals liabilities and equity, then equity equals your assets minus your liabilities, which then basically gives you your net worth of your company. So equity is then your net investment in your company. And that is why I say the two magic formulas is, or there's a few formulas that I really like in business: your gross profit margin, your net profit margin, and your return on investment, your ROI. You would look at your profit that you made. Let's say, for instance, you made 70,000 profit last year, and your equity is 700,000 in your business. So you divide your 70,000 profit over your equity of 700,000, and you get a 10% return on investment. So let's say you put money into your super. In Australia, we've got super, which is like basically pension funding. And you're one of those people that like to go and see your financial planner at the end of each year, and you'll sit down with them and say, we've done well. We've got an 8% return on your total investment. So that is my return on investment. And I translate it back to my business, and I say, well, my return is actually just like 6 or 7%. Is it worth having all that money, having that investment, and using it in my business? That is why it's perhaps a good benchmark to see what is the market worth and what is my business worth. Like I said, there's a lot of nuances in a business. So going a bit back to the house that I've painted for you, when you look at your balance sheet, it's like looking at your house. You would say, my roof is leaking. Basically, look at your balance sheet. Oh, too many people owe me money. You've got to work on the shed, and your veranda needs to be completed. So, in financial terms, perhaps look at your work in progress or your stock holdings. Is that perhaps something that you can better? You can also see in your house, electric wiring seem to be dangerous. Business terms, cut down on your liabilities, and so forth and so forth. So basically, a balance sheet will also give you a broad picture of the health of your business at a specific time, and where are some of the issues which needs to be looked at as well. A healthy home is a lovely home. If there's a massive hole in your floor, you wouldn't just like step around and pretend it wasn't there. Fiscal health is paramount. You need to go out and fix it. Give your garden a bit of a trim every now and again. Make it nice. The book, The E-Myth, The Entrepreneur's Myth, they mentioned start your business with the end in sight, meaning not necessarily that we want to sell our business one day, but plan your business as if it's going to be worth something in the next 2 to 3 years. Meaning you really got to work on your balance sheet, create and sculpt that beautiful balance sheet that you want, make it attractive for people to come and buy. And guess what? If a business is good enough to sell, it's good enough to run. It's a pleasure to run. It's like a car. You've got this beautiful old Lamborghini or old MG standing in your shed, and it's just your pride and joy. People come around making you offers, but you're not going to sell it because it's really enjoyable. You really love driving this car. And that's exactly how sometimes business works. So the balance sheet gives us a bird's eye view of the business health and where the business are in a specific time. The balance sheet is like accounting is based on a double entry system. So all the entries gets done on the profit and loss, and the balance sheet not on the cash flow. The cash flow is more of a hybrid between the balance sheet and a profit and loss. And the first entry that you would always do in your business is on your balance sheet. And that's quite technical as well. So obviously hit me up for more information on the balance sheet. Happy to supply any templates that you might need, or if you need to have a discussion about it, really keen to have a talk with you as well. When we look at where can the balance sheet add a lot of value in your business as well, it's a business health check. Your ratios is a big ticket item. We talked about the return on investment. And then we get other things like the current liquidity ratio, which is your assets and your liabilities. So your ideal is that your assets basically offset your liabilities by a specific rate. Obviously, if it's 2-to-1, it's great. I'm basically talking about current assets. So that's money in the bank, people that owes you money, and your inventory. How is that going to offset your current liabilities? Now, your current liabilities, it could be your creditors, your tax payment, and other current liabilities like short-term loans for that matter. So it's good to be able to see, if it's 2-to-1, it's great. If it's 1.2-to-1, it's perhaps not the best. If it's less than 1-to-1, we need to do some work as well. So a balance sheet is also great to compare growth over a specific time. And like I said in one of the episodes, I'm a great fan, a great believer of the fist bump factor. That little fist bumps every time you look at your balance sheet and you see your growth and your creditors are going down. It just looks healthy. That's a good way and a good system to create more confidence in your business as well. And it's a great scorecard. For instance, you got your equity, let's say it's 700,000, and then you want to set a target. I want a 20% return on investment because that's a pretty good return on investment. So you would know you got to have 140,000 profit this year. And that could be your whole basis for your planning, for your strategic planning, for your marketing planning, for your budget, for your forecast. Let's work towards 140,000 profit for the year. So you know exactly what your net profit ratio must be. You've got to know what your sales is going to be. So think of what Napoleon Hill said in his book, Think and Grow Rich. Step up to the front, select what you want, create your plan, put your plan into action, and follow through with persistence. And that's exactly what I'm on about. So in the balance sheet, there's a lot of things that you can do over time to make it perfect. Just keep chipping away at it. Dr. Z talked about Michelangelo, the sculpting that is done of the statue of David. Michelangelo said, well, the beauty was already there. He just had to keep chipping away some of the marble around it. And I think I'm going to leave us at that point. Each week, I'm going to have a numeric on the show. Now, a lot of you might ask, what is a numeric? Well, a numeric is actually a limerick. It's just got a number connotation to it. And today's numeric is, there was a man named Mr. Moffat. All he wanted was a larger profit. He did not care for his team, only to fuel his crazy dream. Numbers turn, and then old Moffat really got to cough it. And that's a wrap. Thanks for joining me, and I hope today's session was valuable and you feel inspired to take action in your business. Remember, business success is about more than just numbers. It's about passion, determination, and a relentless drive to pursue your dreams through the help of numbers. So keep pushing forward, learning and striving for a bigger life in your business. If you found this podcast valuable, be sure to subscribe. Follow us on socials and leave a review if you enjoyed today's episode. And one last thing, if you want access to additional resources that will help you fast track your cash flow and financial freedom, visit yournumberman.com.au. Until next time, this is Johan, your number man, signing off. Thanks again.